Alright, so ladies and gentlemen, good evening. I want to welcome you to today's session. So this is me, Alvin, and we are here at the Trading Chatter. I would like to thank you guys for coming in today. As usual, we'll be putting off these lectures on a daily and we'll keep on talking and sharing information. So today is the 4th April, Friday 2025, and we've been expecting a lot of news today. So we've been having NFP, for those that know about NFP, which is the non-farm payroll, every first Friday of every month. All civil servants in the United States are always paid, and this also shows us the unemployment claims. You understand? It shows us the rate of unemployment, and yeah, some interest rates are shown by the CPI, which is the Consumer Price Index. Yeah, so there's been a lot of participation today. There's been a lot of stuff moving in the markets, as you can see on the charts above there. So we've been having a lot of work. So yeah, this is the 15 minutes and we are on Asia session here. Pulling off Asia here. This is Asia session. London session is there. New York is still running. New York is still running. So today we've had a sort of accumulation, manipulation, then a distribution in a continuation form. So price is continuing down. So if you're looking for anything on Nasdaq, it should be sells, sell until the PM session where you could possibly be looking for buys, something like that, pushing price back into the daily range. So as usual, yesterday we talked about time cycles, and how to apply time cycles. So, ladies and gentlemen, today still we are going to discuss the same. So, today we are trading chatter. Yes, so we are still going to talk about time cycles. Yes, so who remembers what we talked about yesterday? Yes. Alright, so yesterday we talked about time and how to apply these time cycles. So, but there's just a small glitch that happened that I want to correct first. So if you look at the sessions, I want to correct these things of sessions quick here. I want to correct sessions quick here. Quick. Alright. So for the sessions, we are going to make some corrections, right? We are going to make some corrections. So you have to understand that Asia session starts. Let me first put this sessions here. Sessions. So we have Asia. Asia is the first session, and Asia pulls off at 1800. Note this: 1800 to 2:30 a.m. You have to note that all this time is in New York Standard Time, like time zone. It's New York. Then we have London. So London is pulling off at exactly 2:30. 2:30. London is pulling off at 2:30. 2:30 to 7 at exactly 7 sharp. So yesterday I told you guys 7:30, but I went and did some research and found out it's So we are going to try to apply whatever we applied yesterday. You see how it pulls off. So 7:30. Then New York shall no, not 7:30 rather. At 7. Come on. 7 still stuck in my head. So New York shall start at 7. New York shall start at 7 a.m. to 12. This is the AM session of New York, and also that London session is the AM session of London. So basically, they are overlapping sessions. I talked about this yesterday. They are always overlapping them. So you have to be aware of overlapping sessions. So now, that is it for the session. So as you can see clearly on the chart, these sessions have been labeled clearly. So here we have Asia. Alright, so we have Asia. Asia is starting at 1800. I said I've made a correction on that. Asia is starting at 1800 to 2:30 a.m. New York time. From 2:30 a.m. New York time to 7, that's London. And from 7 to 12, that is literally what? That is literally New York AM session. So as I told you guys recently on the previous lectures, I told you guys that accumulation, manipulation, distribution can't just be like this. It can't just be like this. It can't just be in a reversal form. You have to understand that the continuation can be, or the distribution can be in a continuation form. So for example, today we've got a continuation form, not the actual set of distribution that you always see where price always reverses. So that you have to understand that the game is not static. Like there's nothing that is static. Everything is a default. You understand? So the default is this. Then you have something like a manipulation. Now, for example, today we've had manipulation down. So you may think that we are going to have something like this, a distribution up, right? But what has happened? So this is what I call stage 1 or type 1 of accumulation, manipulation, distribution. This is type 1, right? We put it here. This is type 1. Type 1 where you're going to have, this is your accumulation here. That's going to be your accumulation. This is type 1. I want you guys to understand this very well today. This is type 1 of accumulation, manipulation, and distribution. So this is type 1, and this is type 2. Rather, this is all still type 1 where you have accumulation, then this is the manipulation. Then this is the distribution here. So this is type 1, right? So that's the distribution there. So now this is type 1. This is type 1. Type 1. AMD. This is type 1. This one is for bullish. This one is bullish scenario. Bullish scenario. Something like that. So for bearish, we're going to have something like this. Same thing. It will manipulate up, then distribute down. This one is a bearish scenario. And this is going to be our accumulation. be our accumulation here. Then this shall be our distribution. This shall be our manipulation here. And this shall be our distribution down. So this shall be our distribution. So yeah, here this is going to be our accumulation. That's going to be our accumulation. Then this one here. This one shall be our manipulation. There. And this one here shall be our distribution. So this one is also type 1 bearish scenario. This one is type 1 of AMD, bearish scenario. So you have to understand that there's no default setting to this. That's why I'm calling it type 1. So what is the other type? The other type is what has literally happened today, where you're having what? Accumulation in Asia, and what? You're having manipulation in London, and instead of you getting distribution in the opposite direction or a reversal, you're getting a continuation, which is also a distribution literally. So it is here, and price is still going down. So now this is type 2. That is what we call type 2. So that's what I like calling type 2. So that is type 2. So these are sessions and whatever happens in them. So that is now going to be called type 2. So let me first put a splitting line here. This one is type 1. This one is type 1 bullish scenario of accumulation, manipulation, distribution. Type 1 of accumulation, manipulation, distribution. Bearish scenario where you have accumulation here, manipulation up, distribution down. So now let me give you guys type 2 and how will type 2 look like. So type 2 shall be something like this. This is type 1, this is type 1. Alright, so type 2, this one is type 2. Type 2 that has literally happened today on Nasdaq, type 2 of accumulation of AMD. This is type 2 of AMD. So this is type 2 of AMD, and it shall be something like type 2 of AMD. We're going to start with bullish scenario. So this one is going to be the bullish. Bullish means price is going up. Bullish scenario. So the bullish scenario is going to be the same. So it shall be this. Shall have our accumulation very well. Then price shall manipulate. That's right. Let's pull this guy a little bit down. shall go like this, then shall come back a little bit, then give us the distribution. So this one is basically just like a continuation, you understand? So this one is a reversal type, this one is a continuation type. So this one is the bullish scenario where we shall have our accumulation here. Have our accumulation there. We shall have our manipulation. And we shall have our distribution. So yeah, that's it. That's now. So this one, let me try to change its color to pink. And this also going to change it to blue for the first time. Let me leave that black. So let us go for the bearish scenario. So for the bearish scenario, bearish means price is going down. In bearish scenario, we are going to have something like this. Price is going to do what? Price is going to accumulate. Then it shall manipulate, come back a little bit, then dip. So what we call a continuation. So yeah. So now this here exactly, this bearish scenario of type 2 of AMD. AMD stands for accumulation, manipulation, distribution. So now that type there is what has happened today on Nasdaq. So that is what has happened today on Nasdaq. So you have to understand all these things and how they work. So yeah, so you can see that we are having type 2 where we have accumulation, price manipulates or breaks the high of the accumulation. So what are we expecting? Sometimes the default teaching is you're expecting price to reverse and come down and distribute in the opposite direction. But then in most cases, sometimes price shall just retrace a little bit back into that range of the manipulation. Then what happens? Price shall distribute as a continuation. It's just the same thing here with the bearish scenario. Price accumulates, it breaks the low of the accumulation. Then what happens? It retraces back into that range of the manipulation. Then it distributes in the form of the continuation. So if we also come back here to the type 1, what happens with type 1? What happens with type 1 is that price, in a bullish scenario, price accumulates, it manipulates below, then it reverses and distributes above. Same thing here with the bearish scenario here. Price accumulates, manipulates above, then what? Distributes below. Is everybody understanding this? Thumbs up if you're understanding whatever I'm talking about here. Is everybody understanding whatever I'm talking about? Alright, back to work. So today here is type 2 of accumulation, manipulation, distribution. So today's distribution has been in a continuous form. It has been in a continuous form. Something we call a continuous distribution of price. So you can see that Asia did what? Asia did its work of doing what? Of accumulating. Asia did its work of doing what? Of accumulating here. So this is what we call accumulation of price. Here, this is accumulation. This is accumulation. This is accumulation here. So okay, so that's accumulation in Asia. So Asia session is literally known for doing what? Accumulating. So what I'm talking about accumulation is seeing price moving with these small candles. These small candles is what we call accumulation. Price is not what? It is not decisive on the direction it wants to take. Hence the small candles that you keep on seeing in Asia. So now this is literally what we call the accumulation phase. Price is just accumulating, it's static, it's not moving that much. Then what happens after Asia, where we have the accumulation, we come to London, and what happens in London, we always have the what? The manipulation. So manipulation is always a heavy move sometimes, and literally it signifies a false move. It's a pseudo move. For those that have studied biology, you know what pseudo means. Pseudo means false. So it, in most cases, this is the scenario here that happens. If price accumulates in Asia and it manipulates below, like the way it manipulated here, most traders are fooled to do what? To think that price is going to distribute above. But what happens? Not every time this scenario is going to happen. Not on every occasion. For example, today what happened? Price manipulated down. So here you can see there was even a shift. Most traders would think that price is going to do what? To buy. You can see even literally there's the fair value gap I labeled here. Price reacted from it with this big green candle. So this big green candle can give you some false hope that price, you know what, price may start distributing above. But then you have to understand that this is just a default setting. The market moves in an irrational way. It's not what? It's not default. Like it doesn't work on a default setting that okay, 1 plus 1 equals to 2. That's the default teaching of 1 plus 1. But then 1 plus 1 could be something else. Some people say 1 plus 1 equals to 11. You just add the ones and then you see what they make up. So it's just like that. If you figure out that stuff doesn't work on a default, then a whole new world is going to get opened up to you. So that is what I'm trying to talk about. Is everybody understanding what I'm trying to say? Thumbs up if you're understanding what I'm trying to say. I'm trying to help you guys not to get fooled with these types of continuation and reversal forms of price. So you have to understand that price has two forms of distributing price. It has a reversal form and a continuation form. So what happened here today is what we call a continuation. This is what we call a continuation. Price was bearish since yesterday, and today Friday just continued dipping. So now that's a continuation form. I hope everybody has understood these kinds of scenarios when you're using AMD patterns. And I've also made a clarification, some correction on the sessions. Asia starts at 18:00, not 18:30. London also closes at 7 a.m., not 7:30. So those are the corrections. So now if we go back to London, if we try to just look at London and do our thing. Let us look at New York AM session. So for those that were here yesterday, we talked about time cycles. So I told you guys about time cycles, and I say, what did I say about time cycles? We are going to split each session. For example, yesterday we did London, today we are going to do New York. What do? We split these sessions into what? 90 minutes. We split them into 90 minutes. So now, for example, here we have a New York AM session. For example, today we are having New York AM session. So this one is New York AM. So what are we having in New York AM session? What do we expect? We expect distribution of price. But as I told you guys last time, that if you see that price has distributed heavily, you note this down and note it well. If you figure out that price has distributed heavily in the previous session, be it London, be it Asia, you do not have to expect a lot of momentum and volatility in the next session. So for example, here in London, the manipulation leg had a lot of volatility, like two big thick candles, like, man. So this alone shows you a lot of volume that was displaced. to the downside. Now, what does this tell you? This literally tells you that the market has to go in for a what? A correction move, like, you understand? So it has to come back in a correction move to do what? To balance at least the fair value gaps and give price fair valuation through the auction price theory, whereby um, sellers and buyers have to be what? Balanced equally. So for example, you can see here this fair value gap was balanced by that week. If you can see that fair value gap, if we use that high and this low here, that fair value gap was balanced. Price had to come back here and balance it. So price tapped into this fair value gap and it's now balanced. Now that's what we call fair valuation of price. You understand? That's a theory when we talk about the private group. So now here, you'll figure out that price came back into that fair value gap in a correction mode. It gave us a push here. What happened next? Correction. So now it is preparing itself to give us the next push, but literally we are remaining with a few hours to the closure of today's session, of the week rather. So you have to expect at least a lot of volatility in what? In the PM session of today, of which the PM session has literally started, because it is already 12 and it's like 2 minutes to 1 a.m. 1 p.m. New York time. So you have to expect a little bit of volatility coming in. So you have to expect a little bit of volatility coming in. So yeah, so this is our New York session, New York AM. So if we split New York AM in 2, 3, we are going to get from 7, 7:30. So let me first see this guy. So I hope everybody is understanding whatever I'm talking about, because if you do not understand and you do not ask questions, then it's not upon you. If you haven't understood something, put up your hand and ask. Put up your hand and ask. Or you write your question in the comment section. Alright, so this is it here. So these ones are the New York time cycles, 30 minutes, rather 90 minutes. So you can see that this one is the first cycle here. This one is the first cycle, which is 90 minutes. First cycle, which is 90 minutes. And this one is the second cycle, which is also 90 minutes. And this one is the third cycle. Which is also 90 minutes. So now what do you see? Yes, what do you see? So now if we still do whatever we are supposed to do, you'll figure out that there's something, still a continuation move. So as usual, we all know that the default setting of all of this is going to be what? Accumulation. The first cycle, then the next is going to be manipulation. For as long as they manipulate above Asia high or Asia low, that is what we call manipulation, or that is what I consider manipulation. This is manipulation. Then they distribute in the opposite direction or in a continuous form. That is what I also like calling distribution of price. So you can see that price is still getting distributed in the opposite, in the rather distribution. Okay, so here we go. Here we go. Here we go. Yes, is everybody understanding this? Thumbs up if you're all understanding. Let me not try to leave someone behind. Thumbs up. Thumbs up, thumbs down if you're not understanding a thing and you have a question. Thumbs down, thumbs down. Or text your question literally. Are you guys getting me now? Am I clear? Is my voice clear? Yes? Is my voice clear? Adrian? Is my voice clear? Thumbs up. Guys, is my voice clear? Is my voice clear? Thumbs up if you're hearing me well. Wow. Alright, are you getting me now? Okay. Alright, so that's great. That's great. That is great. So alright, so as we were saying that we are going to split New York session into what? Into 90-minute cycles. So these 90-minute cycles are literally 1 hour and 30 minutes. 1 hour and 30 minutes, 1 hour and 30 minutes. So you can see that we've split New York AM session into 90-minute cycles. So the first cycle, which is 90 minutes, is literally having what? What we call accumulation. The next one is having what we call what? Manipulation. The next one is having what we call what? Distribution. And now this is going to make you precise with your entries. So you can see that the accumulation here, this was accumulation of price in Asia, rather in the first cycle. This was the first cycle of NY, of New York. The price accumulated there. Then what happened next? Manipulation above. So they manipulated above this high. Let me show you guys. So they manipulated above Asia high. This was Asia high here. So this one is Asia high. What have they done? They've manipulated above it. So this one is Asia high. So they've manipulated above Asia high. So the second, rather, it's the first cycle high. The first cycle high. Previous cycle high. Yes. Previous. So we're going to call it previous cycle high. So which has been manipulated, right, by the next cycle. So you can see that this cycle started here. Okay, this was all the manipulation. So this is all the manipulation. Let me change its color to green. Okay, so that's the manipulation. So the manipulation took out the previous cycle high. Then what happened? The distribution came and took out the previous cycle low. They took out the second cycle's low. You can see the low here was taken out. So here, which is previous cycle low, and it's been taken out. So which means that that is a literal shift in structure. And you have to remember that here price came and gave us an institution order flow entry drill. If you go back on the 15 minutes, like it came and it tapped, price tapped into this fair value gap here, this big candle here that you see. So it left this fair value gap, this line here and this line, the wick of this green candle and the wick of this black candle, which passes where the body passed, gives a fair value gap. So this candle here came and gave us an institution order for entry drill. Okay, it tapped literally into this fair value gap, so which gives us confirmation that that fair value gap is what? Has been filled, it has been balanced. So that means we are looking for a what? For a shift, literally. We are looking for a shift and we are looking for price to distribute. So you can see that here, price started distributing from here. This is all, and it's still going on though. So this is all the distribution phase. So, but where would you enter? Is someone seeing the entry even already? So let me first remove this. So this is what you would do. So now, for as long as you've known that, okay, the first cycle accumulated, the next cycle manipulated the previous cycle high, then that means the third cycle is going to be a distribution. So what are we looking for? Let me first remove all these colors. Okay, so now at least it's somehow clean. So you can see, now we go back to structure, we are looking at structure. So you can see that here, price left what? A fair value gap here. So price left a fair value gap there and it came back to it. And price came back to it. So literally your entry would be there for the distribution. Is everybody seeing this? Yes? Is everybody seeing this? Is everybody understanding literally? Thumbs up if you're all understanding. If you're not understanding a thing, thumbs down. So, but that is it literally. So you can still, okay, Ibrahim, I'm going to handle you in the beginners class, but you can still divide the sessions. You can divide London session like this. The only session that I'm not aware of whether I could split it like this is Asia, simply because Asia is just accumulating. Like, okay, alright, you can still split it, but man, shit, man, it's just, bro, man, I just look at the price action. It's not nice, man. It's not nice. So what I do is I either do London or I do New York. So literally here, you would enter from that fair value gap and just take it down. Like just take it down. Although I never entered for this trade, I swear. So yeah, you take it up to that low. You put your stop loss above that candle. Yeah, so you'll just be waiting for your TP to get smashed in a few hours. So this is how you could apply those cycles. First cycle, second cycle, third cycle, they are all 90 minute cycles. The first cycle can be accumulation, the next cycle can be manipulation, the third can be distribution. So, but as I told you guys that accumulation, manipulation, distribution is not the default. Okay, it's just the default setting or the default teaching of this theory, but you could have distribution first, then you would have maybe manipulation last. It is very possible, and it is very possible. So you have to understand that these things work. If you split it, you can see the price is going there. Let me label for you the low that they may likely get to attack. So it's just this low here. So that is our sell side liquidity that we are looking at, price taking. So if you split, I need you guys to go and do homework on this. Go and split first cycle, second cycle, third cycle. You can do it on New York or London session. Those are the two sessions I want you guys to practice this on. You can do it on gold, on Euro USD, on any other pair, but these things work, you understand? So you just have to apply it like this. It gives you that confidence, it gives you that clarity, you understand? On how, on where, on which session do you want to enter in. It gives you that clarity, and also stop loss placement and take profit levels. It just gives you that clarity. So, but if at all we're going to do our usual 2 or 3%, we could be out here. 3%. Yes, 3% we could be out there. Then 2% would be too small to be some quick scalp. It will be too small. But in such cases where I have a tight stop loss like that, I like going for 5%. So, and you can see that this range of TP is falling via 5%. Risk to reward ratio is 5.44. Yeah, so which gives us some, yeah, something nice, you understand? So literally you have to go and backtest these things. Try to look for them, try to look for them, try to look for them. So this is time cycles. So you can still furthermore split these 90-minute cycles into 30 minutes. Should we do it? Thumbs up if you want us to do it. I don't want you guys to get confused here. Or should we first stick to understanding the 90-minute cycles? So 90 minutes are always 90 minutes, 90 minutes, 90 minutes, 90 minutes. So next week I'll teach you guys how to split them furthermore to what? I'll teach you how to split them furthermore to 30 minutes. So 30 minutes now, it's going to give you precise entry levels. They're going to be so precise, you understand? There will be precise entry levels. Precise entry levels. So now all these opportunities come when you know, when you've backtested, when you've done your homework on these concepts. So this week alone we've taught a lot in the evening lectures, though we haven't been having the beginner lectures. But next week on Monday I shall be releasing the beginner's guide to trading. So for those that are just beginners, watch out. You go and check our channel, the Trading Chatter, you figure out. The video shall be there. So you have to understand that you have to put in the time. We've been speaking a lot, we've been sharing a lot of information. Go and test these things. Go and do the homework. Even though you do not show it to me or you send it, but at least do it. But if you've done it, send it, we review it. That's how you learn, that's how you improve yourself, and that's how you grow. So this is it. This is it. So you go back test, try out these things, try out the 90-minute cycles, try out the accumulation, manipulation, distribution. Like label these things. You can see my chart. I've labeled out accumulation here. I've labeled out accumulation here. I've labeled out manipulation here. So Asia session is normally accumulation. That's the default teaching of this. Then our London session, which is here. So this one is Asia, this one is London, where I have manipulation. Then from here we are having New York. From here, this whole white phase here, where we've labeled the 90-minute cycles, it's all New York session, and I'm still looking at. You can see that they're almost hitting our TP level. It's just some few pips. Yep, they are close. They are close. They are close. Finally. So price has done its thing. Yeah, so that would be your trade, and basically you would be out. You'd be out from there. You'd be out. Out. So yeah, that's it. That's it. That's it. That's how you could apply these every day. These things happen. These things happen every day. They happen in the morning, in the evening, at night, the other day, the other month, the other year, continuously. It's just a schematic way of understanding these markets. You understand? So I need you guys to go and backtest these things. Be disciplined. Do your homework. Improve your souls. Next week we shall talk about the 30 minutes cycles. How you could split up these 90 minutes into 30 minutes. 30 minutes. Because 90 minutes is literally 1 hour and a half. 1 hour 30 minutes. So that means if we are going to divide 90 minutes by 3, we shall get 30 minutes cycles. So yeah, that's what it will be, and we shall see. Still the same thing, you'll figure out that those 30 minutes are having accumulation, manipulation, distribution. It's amazing, just know it's very, very amazing. It's always somewhere. And knowing that the price is fractal and it could just do this, it is just always some. Yes, Adrian, I'm seeing your hand is up. Adrian, you have a question? Yes?
For me, I'm confused.
Yes.
In a way that now in the picture that you have drawn, as the first cycle, accumulation, accumulation probably, if you look at it, for me, okay, the other word that you can give accumulations will probably be consolidation. But now for me, I'm seeing the thing is heading up. It's like it has a clear trend going up. In the first cycle of the 90 minutes accumulation, but then when we go to the second cycle of the 90 minutes, the manipulation, probably okay, there, then I would see like a small accumulation because at a certain point the market wasn't moving. But then, okay, the third one, yeah, we can say it's a distribution. So for me, I'm confused there. The first one, I'm not seeing the accumulation. I'm seeing a clear thing going upwards. The second one, okay, I would say there is an accumulation, but we have called it manipulation.
Yeah,
So
thank
that's
you.
it.
Thank you, thank you, thank you for that question. Thank you for that question. There's a reason why I chose that to be. Um, I could have called it. I could have called it accumulation. You know why? If at all it never took out this high and it was just continuing to range like this, I would consider this. I would consider this here manipulation, then accumulation here, then distribution here. But for the fact that it took out this high, then I'm just considering it as a what? As a manipulation still. Because for the fact that they've taken out this high, yes, possibly there are people that were bullish. Let me show you what I'm trying to say, why I'm calling this manipulation. See, on the lower time frame like this, you can't see it. But what did I tell you? I told you that today, in a typical day like today, price is looking to do what? Price is looking to continue with the trend. So where's my price action? This is what I'm trying to tell you guys. How 15 minutes is here. So I hope everybody is seeing this chart on the 15 minutes. Let me show you why it's called a manipulation. Here, this one exactly. That's right. Um, Alright, it's this. So now you have to understand that today is a typical day whereby we are having a distribution in a continuous form. It's the distribution of today is coming up in a continuous form. But what happens? We also that Asia accumulated very well. You can see that Asia did its accumulation very well. London did its manipulation very well. What are we expecting? What are we expecting? Yes? Asia.
Distribution.
Yes,
Distribution in New York.
Yes, what did I tell you guys? That there are two scenarios. You understand? There's type 1 of distribution, of accumulation, manipulation, distribution. This is type 1, which is accumulation, manipulation, distribution. Then this one is also type 1 of the bearish part of things. Accumulation, manipulation, up, distribution, down. Now, this one is the default setting. Like most traders, this is what they know. This is what they know. So they think just price is going to accumulate, manipulate down, then have a reversal here, then go up. Now, they can use this very well to manipulate you. Now, let me show you. Are you seeing here? Let me show you clearly here. Are you seeing here after the manipulation in London ending, right? You can see very well that we had this bullish candle here. Are you seeing this bullish candle? This bullish price action. So this bullish price action came and took out this high. You can see that this wick here took out this high. If you go in the lower time frame, like 5 minutes, you will figure out that this is a body that took out this high. What did they leave? They left this fair value gap. Now this is already a market structure shift. For the fact that they've taken out a high that was part of the manipulation, That is the structure shift. And then price comes back. Are you seeing that fair value gap there? That fair value gap. Price comes back to read. And then does what? It goes up. Now, this going up with this big green candle is what I call now manipulation. Clean manipulation. So now they are inducing volume. They are trying to convince retail traders that, you know what, we are taking this thing up. We are distributing up. Let me put for you in the 5 minutes, you see it clear. For the fact that this high of the first cycle was taken out here, it gives me confirmation that what? That's the manipulation I'm looking for. Simply because we had a shift. You can see here, we've had a shift here. This high has gotten taken out. Then what did they leave? They left a fair value gap here. We are still not seeing it very well. Let me go to the 1 minute, maybe. We'll see it very well. Exactly. So I think you guys are seeing it. So what happens? We have a structure shift here. They break this law of London manipulation here, that lower low. So they break it, then they come back for this higher high, higher low rather. So they also come back for it, higher low. They come back for it. So now they also take it. Then what do? They come back and retest on this fair value gap. They chop all this liquidity. They come back to this fair value gap. Now they came back to this fair value gap here on the 1 minute. What happened? At exactly the mean threshold or the middle point, or what you could call equilibrium, price does what? It reverses and it starts pushing up. Remember, they've already taken out this previous cycle high. What are literally people thinking, especially retail traders? They are thinking that this thing is going up simply because the narrative on accumulation, manipulation, distribution, they know is price is going to push down in the manipulation. If price pushes down in the manipulation, distribution is going up. So what happens? They fold them here. People entered here, stop losses below here, below this low, or even here. Then what happens? Price gives them some opportunities. It pushes up. Then boom, straight run. That is why it ran like this. This run is not coincidental. This run is what we call a stop hunt. Whose stop losses are they running? They are running stop losses of retail traders that entered here trying to think that what is going to happen is going to be the other accumulation, manipulation, distribution, whereby the distribution is always the reverse. It's always the reversal. You have to, and that's why I talked about type 1 and type 2 of accumulation, manipulation, distribution. There's a reversal phase and a continuation phase. Now, for example, today, in this instance, we've had a continuation phase where price has just continued down. And there's a reason why price has ran so down like this from here. After falling them like this, stop losses are here, then this is what we call a stop hunt. That massive raid, let me put for you in 5 minutes, you will see. There are big consecutive black candles that are running. You can see in this whole move we are only having 1, 2, 3 green candles. Actually 2 green candles. This whole move that swept out this low. Because now this would be the last point where people have put their stop losses. So now after falling retail traders to take buys from here, they gave them some opportunities. Then what happened? Boom, they raided them so quickly, massively. What do they leave? They leave fair value gaps. They left this fair value gap. Price came and balanced it very well. They balanced this move. Remember, whenever I say a move like this that's massive, they shall always balance it. Price came back and balanced it effectively. What happens next? Boom, the clean distribution. So clean distribution to where? To this point. And literally our TP was here, TP got smashed. So that is why I would consider that a manipulation. If at all it hadn't taken out this high and this high and coming to balance this, man, I would be like, okay, that's accumulation, and then this was the manipulation. Then, and that's what we would call like a koala cycle. It's a lazy cycle. A cycle that doesn't take out a previous cycle high or a previous cycle low is what we call a lazy cycle. So now I would consider that a clean accumulation. But then for this instance, for the fact that it took out previous cycle high and also tapped into the fair value gap and also took out a higher high, a higher low, man, it just gives me conviction that this is what I would consider manipulation. Have I answered you? Adrian, have I answered you? Yes, Adrian. Adrian, I hope you're okay. I hope you're okay. So that is why I don't know about you. We all look at the markets in a different way. I respect your perspective. I respect it. The way you look at the market is you and your way. It's your craft. So, but for me, that is how I would look at that. That is how I would look at that in that perspective. So, yes. Anyways, you have to put in the time. If you ever want to know how all those things work, how you could apply them, how you could know that this is this is that. It is not a point of, it's not magic, literally. It's not magic. It is just ability to put in the work, to put in the time, to put in the sleepless nights. Yes, Lubega, I'm seeing your hand is up.
Yeah. So for me, what I'm asking here, when I look very well in the illustration, they have 5 hours. Like, how come like you can divide them just 90 minutes? Yet you see there's one that runs from 7:30 to 4:30 p.m. You understand? This
No,
is
I made a correction, Lubega, I made a correction. I said New York runs from 7. It starts from 7. London AM session closes at 7, not 7:30. That's the correction. Yes. So you're asking why I'm splitting it in 90 minutes.
yeah, 90 minutes.
Alright, the reason why I'm splitting it in 90 minutes cycles is for us to get the market behavior. It's a better way to understand market behavior. In which way? In a way that we're having accumulation, manipulation, distribution. We all know that this market or the financial markets move in a behavior, or literally have a behavior of doing what? Accumulating, manipulating, and distributing. So if at all we use our time cycles and we still apply accumulation, manipulation, distribution, it is going to give us an edge in knowing where and how should price go. You understand?
Yeah, I understand. But what I'm saying
Yes.
is, you see, like
Uh,
a session can run for over, let me say, like 5 hours.
yeah.
Like, let's that one of 7 to 4:30. Yeah,
Mm.
it runs for over is it? It runs for over 9 hours. If my math is
Yes, 10 hours.
10 hours.
Yeah. So why are we doing for these first hours alone?
Okay, yes.
Okay, it's like this. You have to understand that New York session is split into two. New York session is split into PM session and AM session. So these 30-minute cycles are for basically AM session. So also the PM session has its own cycles. You understand? Yes?
Yes. I think
Yeah.
I'm going to do this better if you continue over and over again. This is
Pardon?
the question was pardon me. I'm gonna repeat. I will maybe understand this very well
Yeah.
when we over and over again continue with the lesson, because this is actually pattern. I was wondering, this is not something that this lesson doesn't take only 90 minutes. You
Yes.
understand? But
That
you have
it is like these three cycles that I've labeled are for only AM session. New York AM. And we all know that New York AM stops at what? At 12. So that is why it's running from 7 to 11:30, because at 12 the AM session of New York is closing. And what happens when it's closing? Sometimes it's accumulating. That's why you're seeing it's not having momentum right now, but then it's already 1 a.m. So there's also the PM session. So the PM session literally starts at 12. So now the PM session has also started. You understand? Yes?
so what I'm asking,
Yeah.
the analysis that you did today,
You're asking that what?
the analysis that you did today,
Eh,
that you ask for a conclusion of that cell that we are seeing. Yeah?
I do for you what?
The analysis that you did today,
Yes.
that you asked that cell that you were seeing, that you got that cell, yeah?
Eh.
Is that cell at the end of that session or it is the midway of that session?
Pardon me again.
You say we are only doing these things. You have the AM session and then the PM session.
Yes.
I got you right. But according to me, as we were doing this analysis that we've done,
Yeah.
yeah, this cell is just that it gets to the end of this session to a point that it isn't even crossing over to the next session.
Yes, exactly. Yeah.
So why is this here? This the way how we are dividing this thing, is it basically that we divide to equal parts? It's not basically in the 30 minutes or we divide them into 3 equals 6. Is it that way or?
Okay, I'm not getting your question very well, but let me answer you. This is it. We are splitting time into 90-minute cycles simply because we want to understand how price is behaving at this particular or specific periods of time. Furthermore, if we continue putting the 90 minutes until the market closes, you will see it will still be the same. But the reason why I stopped here is because the New York AM session is literally stopping here. From 12, that is the PM session. From 12, that is PM session. So just that little span of time there, you can see what happens. Price is just doing what? It's just accumulating in between there. So
Maybe just continue with your lesson. I'll get you when I get you.
yes, actually you text me after. You text me
Yeah.
after. Yeah.
Because this is time for learning.
Okay.
Yeah. Um, Instantly,
Yes.
maybe what my fellow student was trying to mean that is it that those split 90 minutes like the 3 cycles? Is it that does it mean that it's the only time that when the market in that session is active? Maybe I think.
No. Yes, I get you now. No, it is active up to the time close at 4:30. Yeah? But for me, I just used that for reference because that's the price action we are having so far. We are not having price action for the PM session right now, isn't it? So I'm just using that specific New York opening range, the AM from 7 to 11:30, simply because we have this price action available, and it's what, because you can see now from 11:30 going to 4, we are only having like 1 hour of price action that is moving. So we can't, but still we can apply them and we see what happens. Yes, like I'm seeing your hand is up again.
Yeah, so Alvin, what I was saying is, yeah,
Yes.
you see, when we were doing this strategy, the first thing we did was to divide this market according to their sessions first. And we got that we divided the London session, the Asia, and then the other one.
Yeah.
And the other session, yeah?
Mm.
This that then we let alone went and had to split this. We picked up, let me say, the London session.
Yes.
We had also split it now into the 90 minutes thing.
Yeah.
Isn't it? 3 times, if I got it right.
Yes, you can go to London and you split it. Asia, you split it, but I wouldn't advise you to split Asia simply because Asia is just accumulating.
Oh, so basically we only split
You split London and New York. The reason being, in London we are having what? Manipulation. And what do we know of manipulation? Manipulation is having momentum. It has big candles. And what do we have in distribution? Same thing, big candles. What do we know about Asia session and its accumulation? Accumulation phase is characterized by consolidating price action or small candles. So it is better that you use sessions that are having momentum and volatility to apply the cycles and see how price is behaving. It is much more better to use those.
Okay, anyways, okay, I'll just get to know this. Just continue with the lesson today, and then I'll get to know this.
All right. Okay. So as I told you guys that from we can still have the what the PM cycles, and the New York PM session starts at exactly 1. So the period from 11:30 to 1 is just lunch. That period is called lunch. So literally what happens in lunch, people that are working at the New York Stock Exchange, people that are working in like the civil servants are literally having that period for break. So this period is called lunch. So we are not basically going to look at it that much. So yeah. So you can also look at it. It is also 90 minutes. From 11:30 to 12, from 12 to 12:30, from 12:30 to 1. It is also a period of what? 90 minutes. I think everybody is seeing that, right? This period, it's also 90 minutes. There, it's 90 minutes. So 90 minutes there. So though I know we're not going to look at it. So we're not going to look at that one. So we abandon lunch. So we are going to start from 1 to 4:30. So from 1 we shall go straight to from 1 to 2:30. That's the first cycle. 1 to 1:30, 1:30 to 2. Yeah. Here. Here. 1. 1:30. 2:30. Yes, this one is there. So yeah. So these ones are the other cycles. So this one is lunch basically. So here lunch still okay. Now this is just the PM session, but this one is the lunch here. So we are going to have this one is PM first session, PM first cycle, PM first cycle. Then this one is going to be PM second cycle, PM second cycle. And this one is going to be PM third cycle, PM third cycle. Yeah, so those are the cycles for the PM session. But basically this one is lunch. Yeah, this period of time. So yeah, that's it. I hope everybody is trying to understand this. Like I've tried to break it down in the most simplest way. I don't want to confuse anyone. I know it kind of looks like rocket science and it can be exhausting, but just try to understand this. Just try to understand this. Just try to understand this. Try. So for example, here what do we see? We can see that they have manipulated, okay, they have taken out this liquidity here. Let me extend this just closer. They have taken out that low. Then they have also taken out lunch low, or the first session's low, the first cycle's low. Here, it has also been taken. So what are we looking for? Basically, you're looking for buys. Simply, that's it. So you're looking for buys until they've taken out this high. Now that we can confirm a market structure shift there, if at all they take out this high. But failure to take out that high, market structure shift. Failure to take out that high, we are not looking at any. Okay, it shall nullify our bullish bias, but then you can see that we're having an order block here, which is like a breaker that is also passing through. Let me first check that candle and I see. Oh man, it's too big. Let me just use this fair value gap. So we're having a fair value gap here that has been left. So if they can push and pass this and then come back and retest there, you can look for buys, man. You can look for buys. You can look for some short buys that can be, because now this one is, I don't know, but it looks like accumulation. So if the price can manipulate above it, but they've taken the low already, so if they can come and they take us, if they can take out the high. But then basically you have to remember that our bias on a bigger time frame, like 15 minutes, remember today we are in a continuation market, so that means price is still going down. If you look at today, man, price is just in a continuation of phase, like it is just tanking down. So what is our bias? Our bias is basically we are bearish, so that means we have to be looking for sales, only sales. So now which brings us to what? Which brings us to this fair value gap here that is going to act as our what? Our resistance. So that means, anyways, that could be just a short scalp up to there. Anyways, this has just even nullified our bullish bias. So for the fact that we are bearish, we are until they just violate. If this fair value gap fails to act as resistance for price, if they purge it, it will act as support to push price further. Failure to purge that fair value gap, we are still bearish, and that is it. So I'm still bearish on Nasdaq, simply because of the bias we are having. So I'm still bearish. If price can just get resistance from there, it will be well and good. So I hope everybody is understanding this, right? Yes. Has everybody understood whatever I've been saying? Thumbs up if you've understood whatever I've been saying. Alright, that's nice. That is literally nice. Okay, so yeah, we wait for price. If I'm still bearish, my bias is still bearish. I'm expecting a continuation down. That is what I'm expecting. Let me first try to reload. Anyways, that's what I'm expecting. So yes, I think we've come to the end of today's session, and yeah, the only thing I need you guys to do is go and backtest these things. These things literally work. Go and backtest them. These things work. Put in the time, put in the energy, lock in. Yeah, God is going to give you whatever you need. God is going to bless you. God is going to give you all your heart's desires, just simply because you've put in the time. See, you can't fail. If you put in the time, you can't fail. If you choose not to fail, you won't fail, like for real. You won't fail. And that's just a matter of time. Like failure, it's just a narrative that you only sell to yourself. Me, I'm not a failure, and I believe none of you guys is a failure too. So do not sell yourself the narrative that you're a failure. No, that can't happen. So You have to understand that if at all you want to get something worth of this life, you have to put in the time, you have to put in the work. Success is not earned by just sitting. You don't get what you deserve in life. You get what you've worked for. You earn what you've sweated for. So if at all you're not wanting to pay the price for the success that you want, then please, you're always going to be the same. Nothing is going to change completely. So now you have to understand that. The sooner you understand that, the better. The sooner you distract yourself from all the dopamine that is going on, the dopamine talk, the dopamine shit that is going on, people flexing with benzes, people throwing money, people having fun, people, okay, a lot of stuff. Real traders are going to share knowledge, not sharing their vehicles and stuff like that. Fine, there's a time for that, there's always time for everything. First chase the knowledge first, then other things shall come later. Knowledge, knowledge, knowledge is power. Money is just a byproduct of knowledge. Note that money is a byproduct of knowledge. Failure or luck or, man, I even don't know what to say, but absentia of knowledge within a person is just like, I don't know, you're just broke, man. Without knowledge, you're broke. That is it. That is it. Death is nothing, completely nothing. But for the fact that you can just live under defeat and ungloriousness, man, that is choosing to die every day. So you have to tell me, do you want to die every day, or you're going to stand up and fight? Fight every day that you wake up and you do not choose to change yourself, to make yourself into a better person. You're just harming yourself. Harming yourself. Because there's no time. You have to understand that there's no time. You either sell your time for something, you understand? And that's how wealth has been made always. People are always selling something. Some are selling their time. Some are selling their bodies. So you sell your time to go and work for someone for 8 hours a day. Or you sell your body to go and carry heavy stuff, heavy building material, heavy stuff. And that's the narrative. So you choose what you want to sell. But everybody is selling something. So you just have to choose what exactly you want to sell. So yeah, just it's all your choice, it's all your choice, and it shall always be your choice. So be wise, be wise, be wise. So be wiser. Be wiser. I repeat it, be wiser. Always be wiser. Do not get fooled. Do not get fooled. Be wiser. Be wiser. Yes, so let us pray. Someone volunteer, pray for us. Volunteer to pray for us. Close the session up. Yes, who's willing to pray for us? Yes, okay, Chris. Yes, Chris.
Good evening, guys.
Good evening, how are you?
So let's stand by ourselves and we pray. Lord, I thank you for this day. Today, I thank you for the gift of life. I thank you for protecting our bodies and our mentors who give us wisdom and knowledge about the market. May you protect them, may you give them whatever they wish for this life. And Lord, may you protect us and make us remember everything we learned from them. In Jesus' name I pray and believe.
Amen. Thank you so much. Thank you so much, bro. So, we leave everything to God. I want to wish you guys a happy night, a blessed weekend. Do not forget to enjoy responsibly. Life is too short, but you always want to make clear and better decisions. See you guys tomorrow. Have a blessed weekend.